When you make an investment, how do you feel? Do you stare at your monitor all day long? Are you afraid that something's going to happen to your money, to your investment? Is that how you trade? If that happens to you, that could be a sign that you're placing the wrong trades. Let me help you. You don't need to buy anything. You don't need to invest thousands of dollars for you to learn, for you to become a professional trader. If you want to be a successful investor, pay attention. Does a farmer stare at the field all day long? No, he trusts the process. He knows that there are seasons, there are cycles, right? We get summer, fall, winter, and spring. There are different cycles, right? And the same thing could be said about the stock market, right? We get recessions, crashes, right? Every 10 years there is a crash, a recession. We know that all these things happen, but is that how we trade? Listen, you must be comfortable enough to place a trade, make an investment, buy some shares, and forget about them. In order for you to do that, you need to plant at the right time, right? If you plant during fall and then winter comes, I don't think you will get the best results. You need to plant at the right time. You need to work hard during spring, summer, and during fall season, you enjoy the harvest because you learn the cycles, the seasons. This is not about timing the market. This is about getting the best results possible. Now, when there is a crash, when there is a pullback, those are the times for you to buy. Now, a farmer, he buys a field, he plants a field. Now, if someone else comes and says, you know what, I will give you a 10% return on your investment, and I want to buy it from you. Well, as a farmer, if you give me 10% return, I think I could sell you the field, right? Because it, to me, is a good deal. So does that mean that you cannot day trade? Yes, you can. If you get, the good return on your investment, why not, right? You buy some shares, there's a reversal, you get a good profit, juicy profit, why not? But what we're looking to do here is to maximize your investments. Maximize your investments. If you study any of the most successful investors in history, you know that all of them have something in common, right? They bought when the rest of the people were selling, and they did it for the long term. So when you trade, right, when you sell some of your shares, you need to do it in a way that you keep setting yourself right to keep getting the best portfolio possible, right? The best portfolio. So if you have 1,000 shares and there is a stretch in the market, right? We get a bull run and you have good profits, you could sell some of your shares just to lock in some of those profits, and then wait for another opportunity, and you keep setting yourself up in a way that you can maximize your investments. So again, like a farmer, you have to trust the process. Now, we get patterns, right? We get patterns, we get support, we get resistance. You can use RSI, MACD, average, all of that. It's okay. But that's like saying that you're a farmer and you get worried about how many times it rains a week. right? Okay, it rains on average two times every week, so that means that I shouldn't invest as much, right? You don't do that. You invest, you prepare the field, you work hard, you take advantage of the good seasons, and then you take care of your field, right? You take care of your portfolio, but you don't panic, right? You don't panic if you hear other people talking about a hurricane. You're concerned about that, but that's not how you will, if you want to make farming your career, you cannot worry about that, okay? You take those things in consideration, right? But you don't worry as much because you have your goal defined, and that's to harvest during fall season. You're gonna get the maximum return on your investment. So how do you pick good stocks? Again, you don't need to plant all the crops available. You don't need to, plant peppers, beans, carrots, pumpkins, corn. No, you could concentrate on a few crops that you know well and that they give you good returns on your investment. So how do you pick good stocks? You pick companies that you know well, right? Companies that you know well. And like a farmer, you give yourself enough time, right? You plant your field today, you don't come tomorrow trying to harvest, right? Your fields, because you need to give it time. Another thing, you cannot control the field. You cannot control the rain. You cannot control the soil. You need to trust the process. You plant at the right time and you wait for the right cycles, for the right seasons to get as much as profits as possible. Again, you plant something that you know well, something that you know that will give you a return, right? So you need to pick companies that you know. You are a consumer. You buy, you buy smartphones. You have, a communications plan, right? You have either AT&T, Verizon, or T-Mobile. So you have your favorite retail store. So those are the things that you should invest on, because those are the things that you know, you trust, you use. So how do you pick good stocks? How do you pick good companies? Pick something that you know well. Like a farmer, plant things that you know. Plant things that you know. Plant at the right time and wait for the due time for you to get the maximum return possible. You cannot worry so much about the weather, right? The weatherman is gonna come, be in the news every day, and he's gonna talk about major hurricanes, a hailstorm, rain, drought. That's their job. Their job is just to talk about the weather. You cannot be so concerned about what they say, otherwise you will never plant, right? If you wait for the best time for you to plant, you will never do it. So you're aware of the seasons, right? If the market drops 5%, that means that there is good sales, there is good discount prices out there. If there is a crash, if there is a recession, you don't invest all your money at once, but you can buy some shares. Okay, this is the right time to buy. Now you don't worry so much. Okay, what's gonna happen? Is it 4 o'clock yet? Okay, what is it gonna be tomorrow? If that's the way you trade, let me tell you, you will. That's not the right attitude. That's not the right mentality. You need to. I said it before. You need to have time in your mind. You need to have the right perception of time. Have the right perception of time. Okay? If you're planning to retire in a week, what are the odds you're gonna be right in a week? What are the odds you're gonna pick a stock that's gonna go up 200% in a week? It's hard, right? Maybe it's gonna go up 1%, 2%. So that means that you need to have a good perception of time. Okay, it's during winter, you're already thinking of your field. Okay, as soon as spring comes, I'm gonna plant. I'm gonna work hard. I'm gonna take care of my field. That's how you do it. You could trade in the meantime, right? You can trade if you have a good return on your investment. Why not, right? But you keep setting yourself up. Okay, you set up your portfolio, but always with time in mind. Always with time in mind. So you don't fully commit. Okay, there is a 5% drop. You buy some shares because that's a great opportunity. That's a great opportunity. You don't put all your money in at once because, again, if someone falls from a 10-story building, it's going to be a while before that person starts running again. So when there's a drop in the market, you need to wait for confidence to build up again because everybody's looking at the same thing. The market dropped. People are scared. People have fears. It's going to drop another 5% tomorrow. So you take advantage of the opportunity. You don't worry so much about all the noise in the market. The media will always have something to say. They will always will have a reason of why they think the market is dropping. They will always interview a bear, someone who is predicting a crash. If you're waiting for the best, the bottom, you will never invest. You will never plant. So you take advantage of the good sales, of the discount prices. You adjust your portfolio in a way that okay, when the market recovers in a year from now, I'm going to have a 20% return on my investment. I'm going to have a 50% return on my investment. I'm going to have some dividend paying companies in my portfolio. I'm going to have good yield dividends in my portfolio. I'm going to get rid of this company that's not performing well. Okay, this company here has good potential. When the market crashed, this company didn't drop as much. Okay, so if something like this happens again, I could trust in this company because it's been proven on hard times that this is a good investment here. So you have to think of the future. You have to buy at the right time, right? You cannot time the bottom, but you can take advantage of the good sales, So you have to think, okay, you have to think, if I could only place one trade a day, would this be one of them? Okay, you cannot fall into fear, into panic. Okay, you cannot fall into panic if they predict a rain, a hurricane. The farmer don't go and uproot all his crops, all his plants, right? Because he's trusting the process. He knows he's gonna have good seasons, bad seasons, so he plans accordingly. Okay, so like a farmer, you see, I'm using this as an example to give you the right perspective. And to summarize everything, you need to invest in things that you know. Okay, there will always be a new company. There will always be, a foreign company, a foreign market, someone predicting the new Amazon, the new Tesla. There will always be someone trying to sell a list of the companies they think will outperform the market, but it's not about that, okay? No one really knows for certain what's going to happen. Otherwise, people could predict the big crashes, and even the best investors lose money, right? But they don't panic. They don't panic. They don't think it's the end of the world. They, adjust their portfolio, and if it's the end of the world, then it doesn't matter if you have a portfolio or not, because it doesn't really matter, right? So plan accordingly. Don't pay too much attention to the patterns. There are so many patterns out there. This is a wedge, this is a triangle, this is an ascending flag, this is whatever there are. Always it's gonna rain. There will be days without rain. Those are the patterns. Don't pay too much attention to those. Pay attention to the seasons. Try to identify where are you in the cycle, okay? Is it spring? What can I plant now? Is it summer? What can I plant now? Okay, is it fall? Okay, maybe I should start preparing for winter. Okay, maybe now it's time to lock in some of the profits. You gotta have in mind, when does the quarter end? Is this the beginning of the quarter? Should I lock in my profits now, or should I wait until we're getting closer to the end of the quarter? Okay, what was the last earnings report? Pay attention to the cycles, The market dropped 10%. Okay, now, should I take advantage now of the market, of the prices? Maybe, right? Sometimes people sometimes they say, man, if I had known that the market was going to crash in 2007, 2009, I should have bought some real estate, I should have bought some stocks. But then when the time comes, they don't do anything, right? They don't do anything. So, take advantage now. Take advantage now of the good opportunities, okay? Now, if you see the market, your entire portfolio getting destroyed, then that could be a sign that you have the wrong company. Maybe it's a time for you to cut your losses and adjust your portfolio. Okay, so again, like a farmer, prepare for the seasons, believe in cycles. There are cycles in life, there are cycles in everything. There are cycles in everything in the stock market. But if you really want to become rich trading stocks, if you want to make $1 million trading stocks, you gotta have time in mind, because it's I wouldn't say impossible, but it's really hard to become rich in a week. You gotta give it time. So when you buy options, when you buy contracts, think of the future. Think of, okay, is there a possibility that this company can recover in 6 months from now, in 3 months from now? Buy options for, that expire in a year, 6 months, because that will give you enough time for the market to recover. If there's a blizzard, you shouldn't think that there's not going to be a spring, summer. It's going to come sooner or later. Okay, so don't pay too much attention to the noise in the market. Plan accordingly. Adjust your portfolio. If you study the most successful investors in history, they thought ahead. They gave themselves enough time for the market to recover. They took advantage of the good sales. And again, if you buy any masterclass, any book, any training course, anything, it's the same thing. Okay, no one really knows what stock is gonna do good the next year. They might have an idea, right? But I'm giving you everything for free. It's all the same. I've bought books, seminars, courses, and when I read the book, when I finish, okay, it's all the same thing. Invest for the future, take advantage of the good sales, don't panic, buy when others are selling. Bottom line, my friend, don't panic, trade what you know, buy companies that that you believe in, that the things that you buy. That's how you pick good investments, because you're familiar with the company. Okay, so bulls and bears, thank you for watching. If you haven't subscribed yet, go ahead and do that. Share this video with others so that they can benefit from these videos. I wish I had known what I know today 10 years ago. So if there's a young one you care for, share this video with that person, and I'll see you in the next one.